program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you back with us here at AusBiz. Let's get across what we saw overnight, and global stocks rallying to begin the week. That's certainly the case on Wall Street, gaining as upbeat quarterly earnings results help boost investor risk appetite. A broad tech-led rally sent all three major stock indices higher. The small cap Russell 2000, in fact, was the best performer. Apple shares hit a record after a broker upgrade amid strong demand for its latest iPhone. Meta, Netflix and Alphabet also gaining. Netflix due to report this week. Amazon was in focus with its cloud services unit AWS recovering from a global outage that knocked out thousands of websites along with popular apps including Snapchat and Reddit. AWS saying the cause of the outage is an internal subsystem malfunction. Microsoft shares hit a record on a broker upgrade. Boeing gained after the aircraft manufacturer won approval from the US Federal Aviation Administration to raise 737 MAX production to 42 planes a month. And Weight Watchers surged after announcing that it would partner with Amazon for weight loss drug delivery. Well, Prime Minister Anthony Albanese has held a face-to-face meeting with President Trump at the White House, with the leaders agreeing to invest a combined $13 billion in critical minerals projects and work together to break China's dominance in the space. A framework for cooperating on critical minerals includes offering guaranteed price floors for new producers and blocking asset sales on security grounds. Most immediately, Australia and the US will make a $200 million equity investment in West Australian gallium plant owned by Alcoa and $100 million stake in Arafura Nolan's rare earths mine. Additionally, President Trump has backed the AUKUS submarine sales and technology sharing pact despite an ongoing review by the Pentagon, with the President saying there shouldn't be any more clarifications because we're just going full steam ahead on building them. Well, US Treasury yields have edged lower amid improving risk sentiment around the US-China trade outlook. The US two-year Treasury yield around 3.45%. The 10-year fell back below 4%. And the US dollar index is up slightly on the day. The Aussie trading at 65.2 US cents. Oil prices have fallen to their lowest level since May on a potential global supply glut, with US-China trade relations adding to concerns about an economic slowdown and weaker energy demand. Brent crude futures at $61 a barrel. Copper was up more than 1.5%. Iron ore flat at 103 US a tonne. And gold has bounced back, retracing its losses from the end of last week, with investors buoyed by expectations of further US rate cuts and sustained safe haven demand. Spot gold was up at 1.4% higher at $4,355 an ounce. And Bitcoin is trading higher at around 111,000 US dollars. So let's get a global picture with a focus on US markets. Steve Sosnick joining us again from Interactive Brokers. Steve, welcome back. Good to see you. I was just taking a look at your observations about what's going on with the equity market. It is part of that everything rally we're seeing at the moment, isn't it? But interesting that you say that investors, traders in particular, seem to have that trigger point. The bell rings and they buy.
Yeah. Good morning, Andrew. I'm saying it's almost a Pavlovian market. That bell rings, and from a U.S. point of view, certainly that matters when the opening bell rings on the stock exchanges at 9:30 our time, and we saw it today. It was just we just snapped higher, but it's pretty normal most days. There are people are buying, and I think a lot of individuals put in buy orders to execute at the open or shortly thereafter, and then off we run, or you have traders trying to front run that expected buying activity. The other bell that I think people respond to is actually the alarm bell. When their alarms go off in the morning, because we see this most mornings at around sometime between 6 and 7 Eastern time, give or take. And I think people are getting up, and my joke was get up, buy futures, Drink coffee, maybe shower, maybe brush your teeth. Those are pretty much optional, but they come secondary to buying futures first thing in the morning. But it's working for people, and they're going to keep doing it until it doesn't.
Well, until it doesn't, that's the point, isn't it? Look, Steve, also obviously we're in the midst of the earnings season now. We have had some solid corporate earnings. I was just taking a look at FactSet data there, saying the Mag 7 projected to deliver profit growth of around 15%. So, I mean, that's just further encouragement we're seeing.
Yes, I mean certainly, obviously everybody's pretty optimistic going into earnings season. We had our little hiccup, when it came to some of the regional banks and some of their credit worries. But even there, Zions Bank, when I last looked at it, which was one of the sources of concern, was ticking a little bit higher after the close. And so, there's a lot of good news baked in. Of course, the contrarian might say, if 15% is already baked in, where do you go from there? That means you really have a high hurdle and a lot of guidance that you have to, deliver on. But again, that's not the market's mindset right now. It's very much, no matter how you can make the glass look half full, that's how it's going to look, except for very, very short periods of time, which then become perceived as buying opportunities.
What are you looking forward to in terms of those upcoming earnings results?
Well, I mean, I think, this week, Netflix and Tesla are two of the bigger names coming forward. I think Netflix has been delivering quite well. They've been able to pass along price increases. So let's see if that continues. Tesla, of course, it's a stock unto itself. They had record deliveries, but it'll be interesting to see how that gets, how they project that going forward, since a lot of that had to do with is believed to have a lot to do with the expiration of tax credits on September 30th. So, it'll be interesting to see what their guidance might be going forward, and if those sales trends have fallen off a cliff, as many people think, or if they continue. But again, the Tesla love affair among certain classes of investors, it's very hard to break that the way they're enamored with it. And then we'll start to find out more as we get into later in the week and the following week.
Indeed. Now, Steve, I don't know whether that summit at the White House between President Trump and Prime Minister Albanese has made many headlines there in the US. It certainly has here. It's been a long time coming in terms of that meeting. But look, clearly the takeout from that was both countries aiming to break China's stranglehold on critical minerals. It comes at an interesting point, doesn't it? Obviously, with those US-China trade talks at a pivotal point.
Yeah, I mean, this is the push-pull. I mean, the part of the reason for the rally this morning was, positive noises coming out of the president over the weekend, and his advisor Kevin Hassett this morning on television, and Scott Bessent, the Treasury Secretary, potentially meeting with with the Chinese Vice Premier. That's all sort of good on the trade front. At the same time, you have the summit between Trump and Albanese this morning, basically pushing back on China. So I think it's very much of a push-pull on the China front. I think from a U.S.-Australia point of view, I think it's terrific because talk about two countries with a lot of resources that if they actually put their heads together, along with a country like Canada, that kind of bolsters a lot of the Chinese advantage. I'm sorry, pushes against the Chinese advantage. And I think that this is the problem here is I think the talks between Albanese and Trump went well this morning. He did manage to throw in a little gratuitous swipe, I think, at Rudd at the same time, but that's sort of typical as well as inserting himself in other people's politics. But I think in general, it's the right direction, but I think it's, there's been so many mixed messages on trade, both between our adversaries and our allies, that I think I certainly am encouraged by the fact that at least, two countries that share a common interest could get out of a good meeting together today. That was certainly a plus.
Well, certainly given the potential of where those US-China trade talks could go, potentially break down the prospect there of 100% tariffs on Chinese exports. I mean, that has helped boost gold, of course. We did see a bit of a pullback late last week. It's off to the races again. Interesting that, what are you seeing there at the moment in regards to, is it less about risk aversion and more just getting on that trade?
I would say that the genesis of the rally and the main focus of the rally was on risk aversion and in a certain sense de-dollarization. But I think in general that was, I think it started as a theme of some central banks moving some of their reserves out of USD into gold. I think that gave it a bit of a boost. But as with so many other things, the trade took on a life of its own. And one of the very tricky things is when you get a parabolic rally like we've seen in gold and even especially silver, that's telling us that people are just jumping in, forget buy the dip, forget buy and hold. That's just buy and chase. It also makes you wonder that a lot of times somebody's on the other side in trouble. It did look like from a technical point of view, we were putting in something close to a key reversal top on gold on Friday, but the momentum, again, all momentum trades remain extraordinarily strong, and they shrugged, the gold market shrugged it off again today.
Steve, great to get across what you're seeing in markets. Thanks for joining us from Interactive Brokers.
My pleasure, Andrew. Talk soon.
Let's focus then on where we're likely to open at a positive start, given what we saw on global markets overnight. That's where the Australian market is likely headed when we get underway in just a couple of minutes' time. SPI futures up 0.5%. Stay with us. We'll get across that in just a moment.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.